We're crossing over now live to Standard Bank's trading floor where Shireen Darmalingam, Macroeconomic Strategist on that end, joins us now. Shireen, thanks so much for joining us. Let's take a quick look at the local unit. Of course, we had the rand yesterday softening, and hitting its softest since early December. It was the weakest performer against the dollar in a basket of 20 emerging market currencies. What are you making of the kind of movement we've seen, because further weakness creeping in this morning?
Yes, indeed, Alishia, we did see that weakness come through towards the end of December. And what has happened over the past couple of days, following on from the Fitch ratings downgrade of South Africa, we saw a weaker currency as we moved into the weekend. Yesterday also wasn't a very good day for the local unit, as we saw the mining industry come under significant pressure. And as we know, the rand is a very high beta currency, so it really reacts more significantly than what other emerging market currencies and commodity currencies really react to risk. And we saw some significant risk aversion come through after we saw what has happened in the mining sector and following through from the strike activity that could possibly loom from that as well. So we do see a very significant pressure coming through during the course of the day. We initially did see the resistance level of 883 being breached, and we could possibly see some further weakness come through towards the remainder of the day.
Of course, so we do have economic data points that are coming through that the markets will have to digest as well. Those coming through in the form of PMI numbers and then retail sales data as well. Run us through your broad expectations on those fronts.
With regards to the PMI, we are expecting some increase in the PMI number to above the 50 benchmark level. In fact, consensus is pointing to a 50.2 points coming through for the December number from 49.5 points. But we do have to bear in mind when that survey was conducted, and was really post the Mangaung conference, which indicated that there is sort of a business-friendly environment that we could see spill over into the new year. However, given what has happened over the past few days, we don't believe that that sort of positive sentiment from the manufacturing sector is likely to last and is sustainable. So as we move into 2013, the PMI numbers could possibly drift back below the 50 benchmark line. We have seen that the PMI has struck global PMIs, with the data coming out from the US and China above the 50 benchmark level. So there is some positive news coming through from that front. However, the retail sales data for November is also available later today. We are expecting a very mild increase of 1.3% year-on-year in November, compared to the 1% year-on-year that we saw in the October numbers. We do see most of the pressure coming through from the durable goods components, and that again is going to impact on the household consumption expenditure that we are forecasting for this year. We have already priced in a slowdown in household consumption to about 2.6% last year, and that is from the 5% that we saw in the preceding year. So it's not very good news from the demand side of the economy.
Of course, the rand weakness that we've seen come through, Shireen, has not been engineered like we've seen, the yen's weakness, for example, being engineered over in Japan. But being highlighted over in Japan this morning is that you've got to look at the implications of a weaker currency, and that bringing in risk in terms of imported inflation. Just how dire a risk scenario are we facing in that regard in South Africa?
Well, we are facing some imported inflation numbers on the back of that weaker currency. As I mentioned earlier, we did breach the 883 level, which really indicates that the next resistance level is about 890, and the support level is currently at about 876. So we are seeing a move closer to the 9 rand, which we had priced in towards the end of last year, and we could see that 9 rand level to the dollar towards the end of the quarter as well. So that's really going to put a spin on what we're seeing, and we really need to keep a close eye on that currency with regard to the import that we are currently seeing. We have seen a fairly resilient type of imports, but that is going to start coming off if we do see the currency move into a weaker territory.
How closely are you watching movement in the euro? We've seen some of that euro strength dissipating this morning, and that on the back of comments that the euro was sitting dangerously high. We've had no details come through further than that. Shireen, your view on the euro right now?
Well, the rand has always, or for the most part, tracked euro-dollar movements. But what we have seen over the past couple of days is that the eurozone, the situation in the eurozone, is not really, hasn't really been resolved. And with still a lot of decisions that need to be made, we could possibly see further weakness come through for the euro. In fact, we're possibly seeing further downward movement, and we could potentially see the year end at about 120.